Welcome to Trader TV, your insight into trading for the professional investor. I'm Hamish MacArthur here in Paris at WBR's Trade Tech with 6 Swiss exchanges, Tony Shaw. Tony, welcome to the show.
Thank you for having me.
How are traders using conditional orders to manage liquidity fragmentation?
Before conditionals, you had firm orders being placed into multiple venues. So there's multiple pools of liquidity. And of course, you run the risk then of overfill, i.e. getting back too much of an execution to what you intended. Conditionals allow you to put an IOI, an indication of interest, into the markets and then get firm up requests back. You can then choose which is the best venue to and where you want to execute, so you don't run that risk of overfill. The second element relates to the stale prices on MTFs versus the primary best bid or offer. In dark pools, 28% of executions on the MTFs are at stale prices. And what you see is there's 2 spikes for Swiss, one at around about 3.5 milliseconds, another around about 7 milliseconds, which is when the microwave and fiber users can get ahead of the others with their information fast links into the MTFs and execute at a stale price effectively. Conditionals therefore help you to avoid that situation.
What factors do traders take into account in regards to their workflow?
So the most important one is that order urgent? So does it need to be executed as soon as possible, or are they looking to execute the order over a period of time? It then comes down to location of where you're going to place the orders as a venue. So first there's the sending of the orders to the venues. So you stagger them. They tend to stagger them so they hit all the venues exactly the same time. When there's a change in price, the race condition, what we call race condition, the speed at which that information of a change in price happens, sends a request to firm up back to the broker. And so do the brokers respond to the first firm up request, or do they wait and consolidate a view of all the different venues to see if there's duplications across venues, and then execute on what they think is the best based on reversion, depth of liquidity, that sort of thing. From our members, 50% respond to the first request and 50% actually wait and consolidate.
How does that challenge the trading workflow?
Well, it's particularly pertinent with the volatility that's in the market. It's interesting, again, talking to the traders when they talk about COVID and when the changes in the market happen, then great amount of volume and large market movement. But actually, the volatility caused by the Ukraine crisis with intraday movements quite severe based on any news event were harder to trade. So you then get into, well, going back to my point about firm up requests, and do you respond to the first or do you wait and consolidate? And can you therefore adapt to each situation? So responding to the first request, does that become more important? The technology that you've developed or that you're using, is it adaptable? Can it be tweaked intraday, or is it something that has to be changed over a period?
Are all condition orders equal?
It depends on whether those conditional orders are in a venue that's large in scale or not. SwissAtMid block, which is our version of a conditional, is large in scale. Others are proportions of large in scale. The speed at which the firm up request is actioned between venue is different, so some are faster than others. The technology and the model differs from venue to venue. So again, if you take SwissAtMid block, it's part of the SwissAtMid existing pool, which incorporates the firm liquidity that's resting in there, which tends to be local Swiss members. They're unique to our market, they're single venue. Interacting with them is low reversion sort of thing. So the way we've integrated it, the two commingle and have the opportunity to match between each other. Lastly, I'd say cost, and whilst you may think that exchanges are the most expensive, actually if you trade more than 1.8 million Swiss francs worth on our market, then actually we're the cheapest venue because we cap the level of fees on our market.
I'd like to thank Tony Shaw for being on the show, and of course, you for watching. I'm Hamish MacArthur. This has been Trader TV from Paris at WBR's Trade Tech.